All right, let's go over crude oil this morning. Okay, first of all, let's review yesterday. I'm going to do a video for you guys so you can review it so you understand. Yesterday morning, let's go over here. Gerald, focus on this chart. Yesterday morning at 8 o'clock in the morning, I called a possible number one trade. A number one trade is only off the black charts. We have two trades in the trade room. That's it. You just need to learn two trades, and that's it, a number one, number three. On the black charts, we have a number one and number three, only two setups. Yesterday at 8 o'clock, I projected a low, buying the low, selling the high. The low projection hit to almost the exact tick. We got a pull-in bar, and you see the number one down here. We got to pull in, you see the explosion. Then we got to break back inside a J signal of LVA. You take the first wave, meaning the first J signal, and it got us in on a number three there. Remember, you do not trade off J signal unless market profile sets it up on your own charts. We broke back inside of LVA. The first retracement caused a number three, and that caused that wave up. Then we broke out of HVA yesterday after inventories came out, crude inventories. Take the first retracement and caught the big giant wave up also. So yesterday we had a number one that caught the low 30 minutes after the projection. The number three broke back inside of LVA, retraced LVA on the first corrective wave, and then we broke out of HVA first wave and got that long. Off the longer term chart yesterday, we had to wait for a corrective wave, but we did have a motive and corrective wave. Remember, you want market profile set the trade up. I only trade off two time frames on J signal. I trade off the 5 and 3 sim. This is the 5 sim. Break out of HVA. You're allowed to take the first retracement. There's your motive wave up because we have a 5-minute trend filter built into J signal. Here it is. There's your 5-minute trend filter built into J signal. Trend was up. As price kept moving up, it cannot break HVA. So there's only two wave patterns on J signal. We have one setup on J signal called a number three. With the black charts, we have two. We have a number one and number three. Well, the number three, okay, on the J signal, you can only take a motive wave with 5-minute trend, break out of HVA or below LVA, first retracement, first J signal. But the corrective wave cannot be taken unless you break back inside of HVA if it does what? Weakens the market. It got below at 2 o'clock, first retracement, nailed the high, that's a corrective wave. So that's two waves off of one pattern. So all you need to know in this room are two setups, a number one and number three off the black charts. And the black charts are only with 5-minute trend. Nothing else. You cannot counter trend trade a corrective wave on the black charts. It must be with trend. Where J signal, you can take a counter trend trade only if it weakens back inside of HVA or LVA against trend on the first retracement. That's the big difference, okay? So that's what we had yesterday. Now today, let's move into today. My projection called the low again. I said when I got on the mic this morning, I got triple confluence at 48.80. What you do on the black charts is this. It's very, very simple, okay? Very easy methodology to understand. You first check out your moving averages. You got to find out your bias, your trend first. If you don't know your bias or trend every day in the market, and this has been working well over 20 plus years. When I started looking at soybeans and corn in the late 80s, early 90s, same thing back then, same thing today. The same setup's been working for 30 years. It's the same exact concept. You look for trend first, trend bias. You're either going to trend 3 days and chop 2, or you're going to chop 3 and trend 2 historically. So we're going to get big trend day pullbacks, and these are the easy ones to pick off. If I see this magenta moving average, it's at a big angle up, 35, 45 degree angle. I know I'm in a hard trend up. The smaller moving average, if I see spread between them, it just tells me that buy the dip of market profile. So I noticed that the chart trend is up. So what I'm trying to do, I'm trying to buy the low of LVA within 2 or maximum 3 ticks. I want to come down here, and I noticed that I had my low value areas are in green. I got 2 charts I trade off on the black charts. The bottom left is more volume based. The big chart right here is more price based. Moving averages up. I don't counter trend trade the black charts. So the moving averages are up. I'm not looking to sell. I'm looking to buy. So my projected buy this morning, just how I called the low yesterday, 30 minutes ahead, my projected buy was 48.80. Why? Well, moving averages are up. I want to try to buy the first test of low value area. I saw price profiles at 48.85. I saw volume profiles at 48.85. Hey, right here's our target, guys. Click your target here. A couple ticks at 21. Here's your target. Next target to scale contracts coming up. 48.80 was price profile, and I had my hedge, my green hedge right below it that called the low yesterday. So that's 3 times confluence in the pullback. Price comes down within 3 ticks. Then on the black charts on number 1, I use what? I use my Renko bar to do a pull-in bar. As we move down within 3 ticks, 2 ticks, maximum 3, you're going to have red bar, red bar, red bar. You look for a doji or spinning top. That's the only 2 bars you're going to play off of these black charts for a pull-in bar. Just got hit here, guys. Hold on one sec. Make sure right here's your target. We nailed it. Target is hit. Coast to coast, went from market profile, low value, to HVA. So what we do, here's your pull-in bar. When you come down, look for a doji spinning top. All right? There's your doji, the spinning top. You look to break through the high and close above it. Wicks don't count. There's a pull-in bar right here. It's got to be at the body of the candle. That's your exact bar to get into when it closes. After it closes, your exact bar. You did not risk more than $150 on this trade. No more than $150. Most traders risk only $130, 13 ticks. Your target's going to be, the overall target when you buy LVA is the opposite HVA. Look on the bottom left. My 85.80 was down here. Where's my HVA? Right up here at 21. It just hit. It just went what we call coast to coast. There it is. Now you just got a full market profile to market profile with the trend market on the pullback. And we called the trade out before it happened. This is our market profile is something where it's very leading. You can call your trades out half hour like I did yesterday, sometimes an hour ahead of time. You're not trading off moving averages, baloney. All this lagging indicators, 99% of the indicators to me are worthless. They're junk because they're after the fact. We knew ahead of time. We buy 80 on the pullback with the pull-in bar, nails a low, limited risk, $130 maximum risk, right? Maximum 150, no more than 15 tick risk. And then she goes all the way up for us. So nice trade off that level. Nice little move up. And that's how we do a number 1. That's called a number 1. Now, before I shut this video off, number 1s will always be against J signal because J signal are trying to catch a lower high or higher low. Okay? Lower high or higher low. Right? Where number 1 trades are trying to catch the low or the high with overall trend pullback. Just don't count a trend trade off the black charts, only with trend pullback. All right? That's how we do it. Good job on the number 1 today and yesterday. Gerald, shut the video off. These videos, guys, what we do, and let me give Gerald a